Hi everyone, I'm David Scranton, and thank you for clicking on today's video. We've all seen those innocent-looking memes on social media asking fun questions such as, hey, what's your favorite song? Or who is your favorite teacher? Millions of people give answers, and they do it without realizing that they're providing password hints to scammers. Financial scams are a bigger problem now than ever before, and older Americans are among the most common victims. I'm going to talk about retirement scams on today's show and how to help avoid them. I'll cover how the scam problem has actually intensified since the COVID-19 crisis, common scams to watch out for, how to help protect yourself, and a bit about investment scams in particular. But let's start with some numbers about how bad the scam problem is and how much worse the coronavirus actually made it. In 2020, the FBI's Internet Crime Complaint Center, or IC3 as it's called, received over 791,000 complaints, with reported losses exceeding $4 billion. Nearly 30% of the total fraud losses were sustained by victims over the age of 60. And this resulted in roughly $1 billion in losses to seniors. And that represents an increase of about $300 million in losses for that age group compared to 2019. And the main reason for the increase, analysts agree, was the pandemic. You know, older Americans are already more likely to be targeted. Why? Because they typically have more assets. And during the pandemic, many were forced to conduct more personal business by phone and online. Web scammers saw this as an opportunity, and yes, they pounced. According to the FTC, the pandemic spike cost older Americans an estimated $600 million in 2020. The FTC said increases occurred in nearly all the top categories of fraud. And of course, this includes romance scams, sweepstake scams, business imposters, government imposters, investments, tech support, online shopping, family or friends imposters, and timeshare sales and resales. So to break it down further, here's how some of the most common types of scams on this list work. And let's start with imposter scams. These involve a scammer pretending to be someone you trust, who's trying to trick you into giving them money or personal information such as a password or a credit card or maybe a social security number. And often they pretend to be the IRS or the Social Security Administration, and victims of these calls are frequently threatened with arrest or some other sort of legal action if they don't comply. Scammers today have gotten really good at sounding or appearing legitimate. So beware. If you do receive a call from someone who claims to be the IRS or the Social Security Administration, just hang up. These offices never ask for personal information over the phone, and they never threaten to arrest you or take legal action. As for sweepstakes or lottery schemes, scammers will also contact you by phone, email, or even regular snail mail and tell you that you've won some kind of prize, but that you must do something to redeem it. And typically what you must do is provide them with some personal information or pay them some kind of service fee. It may sound like an obvious fraud, but last year, 60 and over, that's age 60 and over, here in the United States, those folks lost a collective $69 million to sweepstakes scams, according to the FTC. So here's the point. Don't ever get complacent and start to think that you could never be victimized. Instead, get educated and learn how to help protect yourself. Here are some more ways to do that. Never give out personal information over the phone or by email. Most legitimate businesses and agencies will not ask for personal information outside of any official transaction with them, and will only expect you to provide it in person or by some other confidential means. And as for the internet, be very suspicious of any pop-ups directing you to click on them or take action. Also, never click on a link in an email or a Facebook message from a source that you don't recognize. And lastly, don't fall prey to social media memes asking seamlessly innocent questions. Why? because your answers could give them password hints. If you ever suspect that you've been targeted by scammers, there are many resources that you can and should contact. And these include the State Attorney General's Office and the Consumer Protection Agency, or perhaps the Better Business Bureau, or the FTC, which we've already mentioned, the Federal Trade Commission, and the FBI's Internet Crime Complaint Center. AARP also has a fraud watch network, a helpline, if you will, which you can call at 877-908-3360. Finally, the Financial Industry Regulatory Authority also has a resource at finra.org specifically for investment fraud, which leads us to a question that you might be wondering by now. What does all this have to do with investing, and particularly investing for income? Well, the answer is just about everything. When scammers target you, they want as much of your money as they can get. If they can get a huge chunk of your assets, then you've just lost a major source of your retirement income. And some scammers will go directly for those assets with investment scams. And I know that most of us want to believe we're too smart to fall victim to investment fraud. But remember, Bernie Madoff managed to bilk a lot of very smart people out of $65 billion before the authorities finally caught up with him. Here's the point. Protecting your assets from all threats, whether it's market turmoil, the risk of spend down, or scams, all of that is vital to the income model. Those assets are the primary source of the income that you need to meet your needs and goals in retirement. And you can depend on the fact that an income specialist is working to help protect your money. But you need to do it too. I want to bring in Jeff Small, president of Arbor Financial Services, a retirement income store in Melbourne, Florida. Jeff, as usual, great to talk with you today.
Great to be here, Dave.
And of course, this is our great opportunity to introduce today's special guest, and that's Dr. Marc Faber. He's an economist and the publisher of the Gloom, Boom, and Doom newsletter. Marc, thanks again for being back with us here on The Income Generation.
It's my pleasure. Thank you very much for having me.
Marc, I've got a special treat for us. I've got your Gloom, Doom, and Boom report right here from October. And I'm admiring the very first title. It says, how can we expect favorable outcomes from economic interventions, et cetera, et cetera. However, how can we expect continued economic outcomes that benefit, let's say, our viewers and our listeners without Federal Reserve intervention and the expansion of the Fed's money supply and debt? Are we codependent on that now?
Well, asset markets, as you know, are by and large expensive. Stocks relative to GDP are very high. The price to sales ratio is very high. And bonds are very expensive. And since you just talked about scams, I want to give you just one scam that is and should be obvious to every investor. At the present time, inflation is running by official statements at 5.4% per annum, okay? Private service, they say inflation is running at between 5 and 10% per annum. In other words, the cost of living of individual households is rising by more than 5% per annum. But the yield on the 10 years Treasury is around 1.6%. The yield on deposits is next to nothing. When I have a 3 months deposit, I get 0.3% annual basis. So what we have is a rate of inflation, of cost of living increases that is far higher than the return that you get from your investments in bonds and cash. This is expropriation. This is a scam. This is incorrect. and it will lead not to less inflation, but to more inflation. I can tell you, I lived through.
So that means, Mark, what you're saying then is that we're going to have a collapse at some point because we're codependent on the money supply expansion and the Fed's quantitative easing. Is that what you're telling us?
Well, we will have a collapse in asset markets at some point. I wouldn't be able to tell you whether it's tomorrow or in 3 weeks. I can only tell you that at the present time, the American stock market is driven by only very few stocks that are rising and driving the indices higher, and that the typical stock isn't going up much. But as I said, it is a fraud. It is defrauding Americans who don't understand that what they get on their money in the bank and in treasury bonds is much inferior to the cost of living increases. In other words, if they keep their money in a 10 years treasury for the next 10 years, their purchasing power will have diminished very significantly. There's no question about this. These policies by the Federal Reserve are leading to an impoverishment of the majority of Americans. As simple as that.
So Mark, do you think, we say scam, and of course the result is it essentially acts as a scam for conservative investors. I get that. But do you think there's any ill intention on behalf of the central banks whereby they're intentionally trying to keep these rates down just because they want to keep the cost of their own debt down? So is there any intended scam, or is it just an inconsequential scam in your best opinion?
As I said, it is intended to bankrupt the majority of Americans. The pandemic, the reaction to the pandemic and the artificially low interest rates are beneficial to wealthy people, to asset holders, such as myself. I'm making these remarks as a socially responsible person, as a historian, economist, who has studied the political history, economic history. I can tell you this will lead to a disaster. The rich people are becoming richer, and the poor people are impoverished.
Yeah.
There's no question about this.
Yeah. Wait, just curious, getting off topic just a bit. Of course, one of the ways now that the Democrats are trying to solve the problem is by taxing wealth for extremely affluent individuals, taxing unrealized gains for the first time. But that's not the answer either, is it?
I want to tell you something about wealth taxes. Most countries have abandoned them because the cost of collecting them is much higher than what they were able to collect. If you have a few $1 billion or 100 billion, like some people have nowadays, do you think you can't afford to pay a few $1 million to the best lawyers around the world to protect you from taxation? The wealthy people we have statistics whether the tax rate was very high or very low. As a percent of the economy, the wealthy people have never paid much more than 18% of GDP.
Always some great words of wisdom, as usual, Dr. Faber. Thanks so much for being with us here on The Income Generation.
Well, it's my pleasure. Thank you very much.
Today, we're talking about financial scams, particularly scams that target older folks or those in or near retirement. And they're a bigger problem now than they've ever been. But don't worry, today we're going to talk about ways to spot these scams and ways to avoid them. So I want to bring in today's special guest, David Stearns, founder and president of Stearns Retirement Group, a retirement income store located outside of Athens, Georgia. David has more than 20 years experience in the financial services industry. Dave, thanks so much for being here with us, and I understand you have some interesting stories for us today.
Well, I do, Dave, and thanks. It's always good to be a guest on the show.
Great. So yeah, let's get right into it because we're talking about scams, of course. I understand that you have some clients, some folks that you know that have been victimized before by scammers. So, without mentioning any names, I mean, tell us the story. Tell us the story so hopefully some of our folks here can get a better feel for maybe how to avoid some of these traps.
Well, there's those classic scams, Dave, with Social Security and things like that. And then even there was some scams centered around the stimulus checks and things like that. But as a result of COVID, when people were isolated and particularly vulnerable, maybe lonely, spending way too much time online, a lot of romance scams popped up. And I have a client, a lady that passed away in the last 6 months. And her husband, who was a fairly new husband for her, probably about 5 years, who was not a client of mine, we've been in touch with him and he's confided in us. And honestly, Dave, he has fallen prey to a romance scam. What's happened is he's a widower. He's lonely, he's vulnerable, and somehow these scammers know how to create fake profiles. They present themselves as a real person or who has a real problem, and they spend a lot of time communicating with someone like him. And before you know it, the client, or not the client, but the individual has been roped into a legitimate or illegitimate scam.
So do you think that, how much do you think the coronavirus played into this? Maybe people's sense of loneliness, maybe, just that created an increase in these types of things. And then also, what can older folks do to help protect themselves from scams like this?
Well, I do think the coronavirus played into it because from a scammer's perspective, they had fresh meat, meaning more people were online due to isolation. And then you add a layer of loneliness. And then if you add a death, an emotional supercharging event, and the scammers are off to the races. And so it's very ridiculous. I do think that COVID had a lot to do with this. Dave, I think that what we're finding is with the gentleman I spoke of earlier, he's not receptive. He's in isolation. He's not taking advice. And, it's interesting. The Bible says in an abundance of counselors, there's great victory. And so I really think that what I would advise a lot of retirees and to do is to don't isolate yourself from people that can give you good advice, whether that's your children or whether it's some of your close friends. Don't isolate from them. Run all of these things online by them and make sure you're surrounded by some good counselors, so to speak.
David, you shared with us a great story. It wasn't an investment scam, but a romance scam. And it just is proof that these things can take all different forms. But I know you're a big fan in the investment world of education. So how much can education help somebody avoid financial scams?
Well, it's a great question, Dave. It seems like Wall Street advice is so powerful. And a lot of times people aren't getting a second opinion. They're not doing their due diligence. They're just kind of taking it hook, line, and sinker. And often there's some good advice in there, but there's a lot of bad advice in there coming from our industry, as you know. So staying educated, talking to other folks who are investing, getting second opinions along the way, and doing a lot of reading is just what you have to do today, Dave, to stay safe in the investment world.
Sure. I know I've heard you say in the past that in some ways, investing for income in and of itself it can kind of sort of help people avoid scams. Tell me about that.
Well, like the retirement income store, we are all income specialists. And for us, we're fiduciaries. And so we're not buying and selling and trading for commissions. And we're also not creating our own investment statements, right? All of our clients' dollars are housed at TD Ameritrade or Fidelity, a place like that. So our clients are getting statements, not that we create, but that are coming from a third party, which is very helpful. And then for us, as a fiduciary, if our clients aren't winning, we're not winning. So there's a lot of built-in safeguards just in that arrangement like that, Dave.
Sure. Now, in getting out of the scam realm for just a minute, investing for income really not just helps people protect their money and generate income, which of course is what it's all about, but also allows them to get some organic growth if they're not retired yet, correct?
Yeah, that's correct, Dave. Especially, in our case, we often will mix in some growth type vehicles as a part of an income strategy that can bring some capital growth and appreciation. But heck, if they're not retired yet and they don't need the dividends and interest, and we reinvest those dividends and interests, now we're going to be growing income streams in the future on a really stable basis.
Mm-hmm. Okay, as we near the end of the year, we're getting close. We're within a couple months now. What year-end tips do you have for investors who are listening today?
Well, there's still time for a Roth conversion for those that have kicked that can around a little bit. It's time to get serious. We got some time to do Roth conversions. And then, it seems like people like to kick the capital gains tax can down the road. But if you want to harvest some gains in your non-IRA accounts and you want to spread those gains out over 2 tax years, you got a great chance to do it as we end this year, harvest some gains, and perhaps do that at the beginning of next year. And then the last thing I would say, Dave, is you got to nail down your income streams for 2022. If you haven't gotten a second opinion on how to invest for income, now's the time to get that done. Sure.
Make it a New Year's resolution. Nobody says you have to wait till January 1st to exercise the New Year's resolution, right? That's right. David Stearns, thank you. Thank you very much once again for being with us.
Thank you, Dave. It's always a pleasure.
Thanks for watching today's video, Retirement Scams and How to Avoid Them. If you enjoyed this video, then click the thumbs up button to give us a like and leave us a comment in the comment section. And make sure that you subscribe to our YouTube channel for new content each and every week.